Good morning, children. So, here we are starting with a new chapter, which is Books of Original Entry Cash Book. So, let us start with the meaning. Basically, before reading what I have written here, let us discuss in a layman's language. Cash book is a separate book of entry whereby all the transactions which have been incurred in cash, whether in hardcore cash or through checks or bank medium, bank draft, etc., that or those transactions will be recorded in a separate book that is known as cash book. And very important thing, children, if a business is preparing a cash book, that means it is recording all the cash and bank transactions over here in the cash book right away from journal. Then in that case, it need not prepare the various cash account or bank account in leisure. So let us start from here. Meaning of cash book. As you can read here, this book is used for recording all transactions relating to receipt and cash payment. That means all the cash receipts from where we have received the money in cash and all cash payments. We are not concerned about the credit transactions because credit transactions will not be recorded in the cash book. All banking transactions relating to receipts and payments are also recorded in this book. As I told you beforehand, that it will record all the cash receipts and cash payment as well as all the banking transactions. The number of cash transactions is quite large in every business, obviously, and it is quite unpracticable and inconvenient to record all cash transactions in the journal. It is therefore necessary to maintain a separate book for cash transactions, because more or less, even if the business is working on cash and credit both, but definitely the number of cash transactions or the banking transactions, as we know in today's era, we all are working digitally online. So number of cash and banking transactions will be much more as compared to the credit transactions. Therefore, the business, what do they do? Because if we prepare ledger account, we have already learnt what is the format of ledger account, how the ledger account is prepared, etc. It will be very bulky because there are a number of accounts besides cash account which needs to be prepared in the books of ledger. So therefore, what can be done in such a case? A business can prepare a separate book only for cash and banking transactions, which is known as cash book. This book enables a businessman to know the balance of cash in hand and at bank at any point of time. You have already learned the balancing in case of leisure. So the balancing of cash book also is done in the similar manner, just like we did the balancing for cash account. In the similar manner, we do the balancing for cash book also. So whenever we balance at the beginning of the accounting year or any month or any day, we get the opening balance of cash in hand, that means the hardcore cash, or cash at bank, that means the money in our bank account. And at the end of the particular period, we get the closing cash in hand or cash at bank. That means whenever the business wants, it can check the closing balance, how much cash is readily available and how much cash is available in the bank account. It also gives information about the daily receipts, payments, and the closing cash balance at the end of each day. Hence, this is a very popular book and is maintained by all the organizations, whether it is a big organization or small organization. Generally, due to so many benefits, most of the organizations do prepare a cash book. Moving ahead, there are again certain points to be remembered which will be very helpful for you when you solve the practical problems. Number 1, cash book is both a subsidiary as well as a principal book. It is a subsidiary book, that means in addition it is prepared, it is a supporting book because it supports the various leisure accounts and the preparation of trial balance. At the same time, it is the principal book also, it is the main book also. Why? Because as I told you, whenever a business is preparing the cash book, it need not prepare the cash account or bank account, or it need not record the cash and banking transactions in the book of leisure. Those transactions can directly be posted in the cash book itself originally. So that means cash book is also a principal book. Then second point, cash book is just like a cash account which we use to prepare in ledger. It is prepared to show the bank and cash transactions at one place to know the closing balance of cash in hand and cash at bank. Why do we prepare a cash book? So as to calculate the closing cash in hand or cash at bank. It follows the rule of real account. Why? Because we are recording the cash and bank transactions and we know that cash is a real account. So definitely cash book will also follow the rule of the real account, and the rule of real account says debit what comes in and credit what goes out. So from wherever the cash is coming in or the bank balance is increasing, that will be posted on the debit side of the cash book, and all those transactions where the cash is going out or the bank balance is decreasing will be posted on the credit side. Then that is debit what comes in and credit what goes out. Third point, the debit side of a cash book will record all the receipts and credit side will record all the payment. Because again the same thing, debit what comes in, that means what will be coming in, obviously the cash receipts. So whatever are the receipts will be posted on the debit side, and credit what goes out, what will be going out, obviously the payment. So whatever or wherever the cash is going out or the balance, bank balance is reducing or decreasing, that will be posted on the credit side. That means we'll be writing the payments on the credit side. And the fourth point, when a cash book is maintained, cash account is not opened in the ledger. We do not prepare cash account in ledger directly. We post the cash and bank entries in the cash book. Then differentiate between a cash account and a cash book. What is the difference between a cash account and a cash book? We just learned that cash book is just like a cash account. When we prepare cash book, we need not prepare cash account, but yet there are a number of differences between two. So let us discuss. Number one, cash account is an account in the ledger, whereas cash book is a separate book maintained for recording cash transaction. Cash account is a part of ledger, cash book is itself a separate book. Cash account records only one aspect of a transaction, that is cash. It does not record the banking aspect, whereas cash book records both the aspects of a transaction. Then the third point, when transactions of cash are recorded in journal, it is necessary to open a cash account in ledger. That means when we are passing the entry regarding the cash or banking transaction in journal, then we have to prepare the cash account or bank account in ledger. But if we are preparing the cash book, then we need not prepare the journal, we need not pass the cash or bank entries in the journal, and also we need not prepare a cash account in ledger. So in case of cash book, when transactions of cash are recorded in cash book, there is no necessity to open a cash account in the ledger. Then types of cash book. There are four types of cash book. Number one is single column or one column cash book. It is also known as simple cash book. In this case, there is only one column for amount, which records all the transactions related to cash only. It doesn't record the banking transactions basically. Then this is single column cash book where there is one column for the amount. Then second type of cash book is double column cash book. As the name suggests, that double column cash book means the cash book where there are two columns, dual columns of amount. The probability can be, the two columns can be either cash column and discount column, or another probability can be bank column or discount column, or the third probability can be cash or cash and bank column. So these are three types of two column cash book or double column cash book. Then third type of cash book is triple column cash book. As the name suggests, triple. That means in this type of cash book, there will be three amounts column. There will be three columns for the amount on each side. One will be for cash, where we will record all the cash receipts and cash payments. One will be for bank column, where we will record all the payments and receipt made through bank, and one will be the column for discount, where we will record discount allowed and discount received. And the fourth type of cash book is the petty cash book. Petty means small. So petty cash book is a separate cash book which is prepared to record only and only the small nature transactions, let's say 5 rupees, 2 rupees, 10 rupees, like that. So there are four types of cash book. In this case, in your syllabus you do not have to do the second, that is double column cash book. You just need to do the first, that is single column cash book, triple column cash book, and petty cash book. So we are starting with the single column cash book. As I have already told you, in case of single column cash book there will be only one amount column which will record all the cash receipts and cash payments. So as you can read here, it is similar to an account. It is somewhat like cash account. As you prepare the cash account, it is somewhat like that only, with one amount on each side, that is one amount column on the debit side and one amount column on the credit side. The left hand side, known as the debit, records the receipt of cash. Why? Because cash is a real account and we debit what comes in. So whatever we are receiving in cash will be posted on the debit side of the cash book, and the right hand side, known as credit, records payment, because credit what goes out. So whatever is going out will be posted on the credit side. Now again, 2 points to be remembered. Number one, opening balance of cash will be written on the debit side of the cash book as to balance brought down. We have already learned in leisure that how the opening entries are basically are posted in the similar fashion. Now, since cash is an asset, therefore its opening balance will be posted on the debit side, and it is always and always assumed that cash will have a debit balance. That means obviously the debit side of cash or receipt of cash will be more than the payment, because unless and until you have extra cash, how can you make the payment can never exceed the receipt in case of cash. I'm not talking about bank, that is a separate case, we will discuss further. So in case of cash, the debit side will always be greater than the credit side, and therefore we assume that the cash balance has a debit balance, and therefore the opening balance of cash will be posted on the debit side. And we know the rule of leisure, that whatever we post on the debit side, the same rule applies here. It will start with the word to, and if we are writing the opening balance, then we will write to balance brought down, if you are bringing down the balance. If you are investing the cash at the very beginning, then you will write to capital. Then second point, single column cash book makes no record of checks received and given. That means it doesn't record the transaction related to check, whether you have received the check from somebody as a payment or you have given or issued a check to somebody as a payment. And it also doesn't record any cash discount allowed or cash discount received, because we are not preparing any discount column. We are making a very simple cash book. We are making one column for the amount, which will record only and only the amount of cash receipts on the debit side and cash payments on the credit side. Then the format of single column cash book, you can see there are two sides. Left hand side is the debit side and right hand side is the credit side. As you can see the numbering, there are 10 columns in the cash book. The same 8 columns what we have learnt in ledger, the same columns are here. There is only one column has increased on each side, that is VNO. As you can see, the full form is voucher number, that is the bill number. So on the debit side, the first column will be date, then the second column will be particulars, which will record the receipt. So if you write particulars or you write receipt, it will not be wrong. The third column will be voucher number. The fourth column will be LF, that is ledger folio. Now cash book is a separate, it is like a ledger account, but it is a separate book. Therefore we are writing LF here, ledger folio here. Then amount. So these 5 columns on the debit side, the same 5 columns will be on the credit side, that is date, particulars. Now in this case, credit side, either you write particulars or you write payments, because you will be recording the payments. Then voucher number, then ledger folio and amount. So there are 10 columns in case of single column cash book. Now how do you balance the cash book? The balancing of cash book is just as similar as the balancing of a cash account. What you will do, you will calculate the total of the debit side and you will calculate the total of the credit side. If they are coming equal, well and good. That will be a very 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 rare case. Mostly the debit side will be more than the credit side generally, because as I told you, cash balance can never show the negative amount. So the debit balance will be more than the credit side. That means there is a deficiency in the credit side. That means you have to put the deficient amount on the credit side so as to make both the sides equal. So the deficient amount, which is better known as the balancing figure, will be shown on the credit side as by balance carried down, and you will write the balancing figure. Then you will do the subtotaling part, which will be equal debit side and credit side. And do remember the rule of the ledger, that whatever is the whichever side you have written the balance carried down, on the opposite side you will write to balance brought down or by balance brought down, as the case may be, and the amount against brought down will be the same as what you have written in front of carried down. So let us read from here. Cash book may be balanced daily, weekly, monthly, or yearly even, depending on the need of the business, that we know very well. Normally, it is balanced daily in order to tally the balance shown by the cash book with that of the actual amount of cash in the cash box. It is up to the business, as in when it wants to balance the cash book, either daily, monthly, weekly, yearly, irrespective. But generally, it is suitable and it is feasible, and generally business do that. They balance the cash book every day so as to just keep a cross check whether the cash balance reflected by the cash book is equal to the cash amount reflected in the cash box or not. In case of any discrepancies, the measures can be taken. Following points should be taken into consideration while balancing the cash book. Number 1, the receipts or the debit column will always be bigger than the payments or credit column, as we were discussing. Number 2, the difference will be written on the credit side, obviously, because if the debit side is more than the credit side, that means the deficiency is in the credit side. So the balancing figure, the deficient amount, will be written in the credit side. The difference will be written on the credit side as by balance carried down. This will make the total of the two sides equal, and the total will be written in the two columns opposite one another, as we used to do in case of leisure. Then third point, very important, the closing balance becomes opening balance of cash in hand at the beginning of the next period. That means if you have balanced on 31st March, then the same balance carried down will be brought forwarded on 1st April, next beginning of the next period, and is written on the debit side as to balance brought down, because the balancing figure, the balance carried down, will always be written on the credit side in case of cash. Therefore the brought forward will be written on the opposite side, that is the debit side. And debit side, whatever we are writing, we are starting with the word to. So we will write to balance brought down. And don't get confused, the amount to be written in balance brought down will not be the total amount, rather it will be the amount which you have written in carried down. Now fourth point, transactions in which party name is not given. I am talking about the cash book. Transactions in which party name is not given are treated as cash transactions and will be recorded in the cash book. Suppose if the question is silent regarding cash as well as regarding the name of the person, then in that case you will assume it to be a cash transaction and you will record it in cash book. For example, if the question says goods sold rupees 20,000, you are neither informed whether the goods are sold in credit, nor you are informed that to whom the goods are sold, name of the party, nothing, everything is silent, just goods sold 20,000. Then in that case you will assume it to be a cash sale and you will show it in the cash book. And since it is a cash sales, that means cash will be coming in, so you will be showing it on the debit side. Fifth point, transactions in which party name is given are treated as credit transactions and will not be recorded in the cash book. If in any question, even if the word cash is not given but the name of the party is given, then in that case you will apply the same rule as in journal. You will assume it to be a credit transaction and you will not record it in cash book, because cash book records only the cash transactions. For example, the question says goods sold to Ram 20,000. Cash word is not given but the name of the person is given, so you will assume it to be a credit sale and you will not record it in the cash book. The sixth point, Transactions in which both party name and cash are given will be treated as cash transaction and will be recorded in the cash book. That we know, which we have already learned in case of journal, that even if the name of the party is given, but if the word cash is given, we do not consider the name of the person. Obviously, it is a cash transaction and it will be recorded in the cash book. For example, goods sold to Ram rupees 20,000 in cash. So we have nothing to do with Ram. We have just to do with cash and sales. And while preparing the cash book, as we know, cash book is just like a cash account. So in cash book, we will not write the cash aspect. So what we will write, we'll record the sales aspect. And where we will record, because of this transaction, cash is increasing, cash is being received. So we will show it on the debit side as to sales account 20,000. So I hope the points which we have discussed till here are clear to you, children. Moving ahead with an example, it is a practical question. It is very much taken from your book itself, and just to make your concepts clear and just to give it a quick recap, enter the following transactions in a single column cash book. 2018, that is the year. March 1st, commenced business with cash rupees 20,000. Very important. The word commenced means started business with cash. That means it is on March 1st, 2018 that your business is being started. It was not existing beforehand. If the question would have said that at the beginning of the year there was cash amounting to 20,000, then we would have written two balance brought down on the debit or the receipt side. But here the question is saying commenced business with cash or started business with cash 20,000. So what should be the entry? Cash account debited to capital account. So in this case, you will not write cash, you will write capital. And because of this transaction, money is coming in the business. Therefore, on the receipt side of the cash book, you will write to capital account 20,000. Then March 2nd, bought goods for cash. Again, you are purchasing the goods for cash. And if you are purchasing the goods, that means you are paying the money in return. That means cash is going out. It is a cash payment. So this will be shown on the payment or the credit side as buy purchases 5,000. You will not use the word cash in case of single column cash flow. Then March 5th, sold goods for cash 4,000. Again, goods are being sold for cash. That means cash is coming in. So it will be recorded on the debit side, on the receipt side as to sales account 4,000. Then March 10th, goods purchased from Ravi on credit. It is not in cash, therefore it will not be recorded in the cash book. Then March 13th, paid to Ravi 7,000. Again, if we are paying to Ravi, that means cash is going out. It will be recorded on the payment side as by Ravi 7,000 because we will not write the word cash. March 15th, cash sales 8,000. Again, when we are selling, that means cash is coming in. So we will record it on the receipt side or on the debit side as to sales account 8,000. March 18th, purchased furniture for cash. So when we are purchasing furniture for cash, cash is going out. It will be recorded on the credit or the payment side as buy furniture 6,000. March 20th, paid wages. Now we know that wages, rent, commission, all the nominal accounts, even if the word cash is not given, we assume it to be in cash. So when we are paying wages rupees 380 in cash to be assumed, that means cash is going out. It will be posted on the credit side or on the payment side as buy wages 380. In the similar fashion, paid rent also, buy rent 400 on the credit side or on the payment side. Then received commission 600. When we are receiving the commission, that means cash is coming in. So it will be posted on the debit side as to commission 600. Then withdrew for personal use or personal expenses. That means, and again, personal expenses or personal use means drawings. So whenever the proprietor is taking out some money for his personal use, that means cash is going out. So it will also be shown on the payment or the credit side as buy drawings 1,000. And then last, paid salary. Again, nominal account we are paying, that means cash is going out. So on the credit side we'll write buy salary account 900, and whatever the date is, March 1st, March 26th, March 31st, etc., that will be written on the date column. So this is the solution. As you can see, In the books of cash book, then we have shown left hand side the debit side and right hand side the credit side. Then we have shown the columns, first of all date, then particulars or receipt, then voucher number, then ledger folio, amount. And then we are starting with the credit side columns, same columns, date, particulars or payments, voucher number, ledger folio and amount. As you can see, we have done the posting on the debit side. On the receipt side, we have shown two capital account 20,000 in the amount column, two sales account 4,000 in the amount column, two sales account 8,000 in the amount column, and two commission account 600 in the amount column. On the credit side, you can see we have written buy purchase account 5,000, buy Ravi 7,000, buy furniture account 6,000, buy wages account 380, buy rent account 400, buy drawings account 1,000, and buy salary account 900. And in the date column, we have written the respective date: March 1st, 5th, 15th, 26th, March 2nd, 13th, 18th, etc. And do remember, children, unless and until something is specified in the question, we will do the balancing at the end of the month. So here now, after posting all the transactions, what you will do, you will total the debit column or the receipt column, and then you will write total receipt. As you can see in the particulars column, it is written total receipt. And what is the total of debit side? 32,600. Then on the credit side, as you can see, you will total the credit side or the payment side, and in the particular column you will write total payments, and the total payment is 20,680. Obviously the debit side is greater than the credit side. And how much is the balancing figure or the deficient amount? 11,920. How have you got it? 32,600 minus 20,680, which comes to 11,920. And since you are writing this balancing figure on the credit side, therefore you will write buy balance carried down 11,920, and this balancing will be done at the end of the month, therefore the date will be March 31st. And then you will show the subtotal 32,600 on the debit side and 32,600 on the credit side. Then what you have written carried down in the credit side, on the opposite side, after doing the totaling, you will be bringing it forward on the next beginning date. That means after 31st March comes April 1st. So in the date column you will write April 1st to balance brought down, and the amount will be what you have written in carried down and not the total amount. So the amount will be 11,920. So this is how you will prepare the single column cash book and how you will balance it. Now the hint: cash book never records the credit transactions, hence no record will be made in the cash book of the credit purchase of goods from Ravi on March 10th, that we have already discussed. So I hope all the points which we have done here is clear to you, children. Just go through the video once again and revise the topics. This is the assignment based on this part, children. You have to answer the following questions in your register. Question number 1, you have to state the meaning of a cash book. What is the meaning of a cash book? A cash book is a separate book which is prepared to record all the cash and bank related transactions. Then question number 2, state two differences between a cash account and a cash book. Cash account is a part of ledger, whereas cash book is a separate set of book. Then another difference which you can write is that a cash book is mandatory to prepare when cash transactions have been recorded in journal, whereas cash book is no, it does not requires the preparation of journal or ledger. It directly can be prepared without recording the cash entries in journal and ledger. Then question number 3, state the types of cash book. There are 4 types of cash book: single column or one column cash book, or which is also known as simple cash book. Then double or dual column cash book, or 2 column cash book having cash and bank column, cash and discount column, bank and discount column. The third type of cash book is triple column cash book, and the fourth type of cash book is petty cash book. Then question number 4, you have to prepare a format for a single column cash book. Obviously you can take the help from your book or the slide which we have discussed here. You can make this format of single column cash book as I have made here. Then question number 5, children, you have to solve practical question number 1 and practical question number 2 from the chapter Books of Original Entry Cash Book of Your Accounts, book by D.K. Goel. So Just go through the video once again, children, complete all your work, complete all the questions in your copies, and don't forget to revise and be very, very particular with all the formats. And in the upcoming video, we'll be proceeding further with the triple column cash book. Till then, thank you, children. Take care.